So I'm going to watch out for a bounce play for PGOLD. And what do you think, Alexo? Is it time to buy PGOLD?
I don't know.
Do you think we can find out when to buy into PGOLD? Is it soon?
I don't think so.
Okay. So are you telling me that at this point we should be bearish about the stock? Hello, good morning. Welcome to Imperial Trades. Today is March 7, 2021, and we are going to analyze the 30 stocks in the Philippine Stocks Exchange Index. So first, let us analyze the performance of the index in the last 6 months. As you can see, since January 11, 2021, the index reached 7,400 level, but then, since then, it started to show lower highs, as you can see here. So the top was January 11, 2021, and then the next lower high was on February 10, exactly 1 month later. And then recently, on the 3rd of March 2021, another lower high at 6,945. On the other hand, you will also see that the index showed higher lows, and if you look back within the year, January 29 had a low of 6,600 level, and then on February 26, almost 1 month later, you can also see a low at 6,687. If you draw the lines of the lower highs and higher lows, you can start to see the formation of a wedge, or some people call it apex. So we are starting to see lower highs and higher lows forming the triangle, which means the volatility is getting lower and lower. And for technical analysts, technical traders like me, this is looking exciting because we know that this is about to go wild once it breaks out of the apex, once it breaks out of this triangle. And no one can tell really if it's a breakout going up or a breakdown going down, of course. What I can just tell you right now is that the last few days has been promising. The green candles are supported with very high volumes, while the red candle shows very little volume. That means there's not a lot of selling involved when the market goes down, and there's a lot of buying involved when the market goes up. And also, if you look at this apex formation, you see most of the candles are leaning towards the higher side, and the last several candles, let's say 10 candles, you will see long lower shadows of the candle. That means at the end of that day, before the end of that day, there's a lot of buying bringing the price up, and that is a sign of bullishness in this region. In terms of horizontal support, you will also see horizontal support at the level of 6,600 to 6,700. So this bottom here on January 29 will give you support at 6,600. This gap up here on November of 2020 will give you support at 6,000, near 6,700, as well as this bullish engulfing candle on December 1, 2020 will give you a support at 6,738. And then the last bottom candle on February 26, which is called a piercing pattern, which is the opposite of dark cloud formation. This is a bullish pattern, and this will give you a support at 6,700 level also. So pretty much you have a support at 6,600, 6,700 level, while you are also looking at resistance at 6,800 to 6,900 level. So at this stage of index performance, I am around 95% cash. I only have 5% of my money invested, and it's not in the index stocks. I am willing to wait and see what's going to happen. Why? And that's because March and April is the time of the year when the previous year's annual report is being finalized, and that's the time of year when the final pricing of the stocks will come in based on last year's performance. So that is why there's a lot of uncertainty this time, and I am not going to risk putting money when I don't know and I have no clue yet where the market is going. So now let's go to the individual component stocks of the index. So I have the tool here in Microsoft Excel, And this tool is just simply a chart that shows the performance of all the 30 stocks in the last 6 months. The chart simply shows the performance of all the 30 stocks in the index from September 15 to March 4, actually March 5. Actually, the data is up to March 5. And the data plotted here is not the daily prices, but instead, I used the 10-day moving average because I wanted to see a smoother chart instead of very choppy chart. So, let's see what's going on here. For the last 6 months, you can clearly see these two stocks here are the leaders. The green is the curve for AGI, Alliance Global, and the yellow is for LTG, and both of them are nearing the 70% gain in terms of moving average. Their moving average is now up 70% versus the moving average in September 15. You can also see the bottom here. The red curve is from PGOLD, Puregold Price Club. It has lost already around 28%. That's a huge drop already. And the second one is the orange line here, which is from RRHI, Robinson's Retail. And then the third lowest is the telco giant PLDT with the symbol TEL, with a loss of 11% in the last 6 months. All the rest, there are a lot of other good performing stocks as well. So I'm going to show the top 10. So here are the top 10 stocks of the PSE index stocks. And you can see that the top 10 in the last 6 months are all above the 30% gain. The stock with the least, not the least, but the top 10 is Mega World, followed by RLC and DMC. You can see here GT Cup has 43% gain. Ali, the light blue line, is from ALI, Ayala Land. This is 37.72% gain. And the others, all the rest are just above 30%. So the third highest is a bank stock, which is Metro Bank, MBT, with a gain of almost 50%. It's around exactly at 48.36%, which is pretty good as well. So as a recap, you have a top 3. 2 are conglomerates, top 1 AGI, top 2 LTG. And the top 3 is a bank stock, MBT, followed by the 4th, which is GT Capital, which is another conglomerate, which owns Metro Bank. Let's now go to the bottom 10. Here are the bottom 10 index stocks with the lowest performance by Puregold in the red line here, PGOLD, followed by RRHI, which lost 18% in the last 6 months. And as mentioned earlier, the telco giant PLDT with code TEL lost also minus 11%. So for these 3 stocks, why I am highlighting this is because it's a potential recovery play. So Puregold dropping 30% with the economy probably recovering, the vaccines have arrived and started to be given to people. So retail probably will recover. And RRHI is another retail company. Telco, I'm not really sure because the third telco DITO is opening in this month of March. Now let's go to my co-trader, Alexo. And I will ask Alexo to analyze the stocks that we have discussed. Let's see what Alexo has to say about the stock, the leader of the pack, which is AGI. And let's hear what Alexo has to say.
AGI's gross revenue is increasing by 7.96% per year, while its net income is increasing by 3.52% per year. The company's book value per share is increasing by 11.59% per year. Meanwhile, its stockholders' equity is increasing by 10.93% per year. Net profit margin 3-year average is 16% per year. While return on equity, 3-year average is 8.33% per year. I'm unfortunately neutral about this stock. I'm sorry.
Thank you very much, Alexo. Now let's move on to the next stock, the second leader, which is the Lusitan Group conglomerate, LTG.
LTG's gross revenue is increasing by 3.29% per year, while its net income is increasing by 8.86% per year. The company's book value per share is increasing by 7.47% per year. Meanwhile, its stockholders' equity is increasing by 15.31% per year. Net profit margin 3-year average is 26.33% per year. While return on equity, 3-year average is 9% per year. I'm unfortunately neutral about this stock. I'm sorry.
So thank you very much, Alex. So just to point here, the top 2 stocks of the last 6 months in the Philippine stock market, their stockholders' equity is increasing by double digits. And also their net profit margin are quite high at more than 25%. For information also, this data is based on annual reports from 2012 up to 2019. So this is pre-pandemic figures that we are asking Alexo to analyze. Now let's go to the bottom 3. Let's start with PGOLD here. Alexo?
Gold. Gold's gross revenue is increasing by 15.02% per year, while its net income is increasing by 13.93% per year. The company's book value per share is increasing by 11.75% per year. Meanwhile, its stockholders' equity is increasing by 12.33% per year. Net profit margin 3-year average is 4.5% per year. While return on equity, ROE, 3-year average is 12.33% per year. I'm unfortunately neutral about this stock. I'm sorry.
Thank you very much. So just to highlight the gold in PGOLD here, before the pandemic, Puregold Price Club's return on equity is actually very good at 16.67%. That's high. The downside before the pandemic is that the book value was decreasing at a single digit, and as well as the stockholders' equity. So the company is losing quite a bit of value, and it's probably due to its net profit margin, which is only at 10-11%. And I know there was a rally of PGOLD in the later part of 2020, but the last 6 months was net negative at negative 28%. So I'm going to watch out for a bounce play for PGOLD. And what do you think, Alexo? Is it time to buy PGOLD?
I don't know.
Do you think we can find out when to buy into PGOLD? Is it soon?
I don't think so.
Okay. So are you telling me that at this point we should be bearish about the stock?
I'm definitely bearish about this stock.
Thank you very much. Now, are you ready to move on to the next bottom performer?
Yes.
Okay, let's go. Can you let me know what is the performance of Robinsons Retail?
RRHI's gross revenue is increasing by 15.15% per year, while its net income is increasing by 1.93% per year. The company's book value per share is increasing by 9.83% per year. Meanwhile, its stockholders' equity is increasing by 13.16% per year. Net profit margin 3-year average is 4% per year. While return on equity, 3-year average is 8.67% per year. I'm unfortunately neutral about this stock. I'm sorry.
Well, thank you, Alexo. I don't know why you are saying you are neutral on this stock, but for me, I am bearish on this stock. This stock is giving a return on equity of 8%. That's single-digit return on equity. Stockholders' equity also is just above the tens. Okay, it's quite good. Stockholders' equity is increasing at double digits, but the net profit, which is the source of all this growth, is only at 4% per year. So you have a business and then you have a net profit of 4% per year. That's not very good. That's not looking very good in the near future. So you as a company might need to do something new in order to change the direction of the profitability. Finally, let's go to the giant PLDT, which is being challenged by the third telco. So let's see what Alexo has to say about the stock PLDT.
TEL's gross revenue is increasing by 0.53% per year, while its net income is decreasing by -6.54% per year. The company's book value per share is decreasing by -3.69% per year. Meanwhile, its stockholders' equity is decreasing by -3.17% per year. Net profit margin 3-year average is 11% per year. While return on equity, ROE, 3-year average is 16.67% per year. I'm unfortunately neutral about this stock. I'm sorry.
Alright, thank you, Alexo. And I understand, I think you are very neutral in most stocks, and I would not challenge your opinion. Your opinion is as good as mine. But for me, telco at this point, although it lost 10% in the last 6 months, I think its performance in 2021 is still going to be challenged, simply because of the arrival of the third telco. In terms of technology, I think PLDT will need to catch up. In terms of sentiment, probably there will be customers who are complaining, and I'm of course aware there's a lot of people complaining about performance of telcos. No less than the president was complaining, and that is the main reason why the third telco, idea of the third telco arrived in the country. So I would say I will be bearish regarding PLDT's performance for 2021. So Alexo, thank you very much for your assistance. Would you be willing to help me again next time?
Yes.
Alright, so just final question. Do you know what's going to happen to the market tomorrow?
I don't think so.
Okay, thank you very much. I'm just kidding. So that's it, folks. Thank you very much for watching, and see you soon in the next videos.